All right, guys, here we go. Disclosure, if you hear some pounding noise back behind me, that's the economic ninja spiking the football in the end zone. Yeah, guys, every so often you got to take a lap around the track because you knocked one out of the ballpark. And the reason for that is that about the middle of last week, we were calling for soon to be a stronger dollar, which would cause commodities to drop a little bit, okay, including oil, gold, silver, platinum, and copper. And as you know, the economic ninja is very much behind those commodities. And another thing is that we put together, yeah, this is a shameless plug, but for you watching this video, I'm going to give you some tips here to make it very well worth your while. Anyway, we have a collaboration on a micro futures course that breaks down, gives you an introduction to the micro futures, and also a number of chapters. Matter of fact, over half the course is on trading those micro futures. Okay, and we'll get into that, and I'll show you some tricks here, and hopefully, you'll check us out. But first of all, how do we know that we were going to get a stronger dollar coming soon? Okay, well, first of all, let me go. Well, I'll just start right here. First of all, we were coming off the 200. This purple line is the 200 moving average, or any moving average is just the average closing price over that timeline, whether it's a 20-day moving average or a 200-day moving average, just the average closing price over that timeline. Secondly, we were coming down into this low pivot. Okay, high pivots, low pivots are extremely important, and a lot of your information about support and resistance is going to be on the left side of your chart. You're going to be able to, it's almost like, looking into the future by looking back, if that make in history, if that makes sense. So anyway, we had two factors. One, we had the low pivot here coming down after we hit resistance. And there's another little trick here that we use that has like a 83 to 87% probability odds of working out correctly. And of course, that did come to pass. And then also we had the point 786 fib line down here, that gray line. Let me go ahead and take all this off, clean this up for you. And then we knew because we had, more than one factor down there. We're going to have a high odds, high probability for a bounce on the dollar. And then we will, carry on here over the next few days to see how high that goes. If it's just a dead cat bounce, which we are thinking it is, or if we have a little bit more, strength there. And then another situation, how we knew about the breakdown almost to the day, is that this trend line right here, and we talked about this before, but normally on the fourth or fifth hit, you will break down under that support line, whether it's a moving average or a trend line, high pivot, low pivot. And as you can see, one, two, three hits. The fourth, we came down. And then according to classical technical analysis, you'll come back into that price range that you broke. And it'll now check it to see if it's resistance or support. And of course, it was resistance. So here we are. Okay. And then we put on those trades, just, honestly, just to put my money where my mouth is, including the economic ninja. For example, oil. We went short on oil, and here it is right here. That's a great number, by the way. And then let me show you gold. We've already gone, and my total invest. Let me get that red dash line. That red dash line was my stop loss in case it went the opposite way on us. And that's one of the things we teach is three guaranteed ways to set up your stop loss so you'll never have to add to your account again, and you'll never get wiped out. Okay. And those of you, including myself, I've been in that ring, you know exactly what I'm talking about. So anyway, this is our total investment, and this is where we are right now on gold. And then silver, the same deal. Here was my stop loss right there, taking that out. And yeah, we have our targets down here. And what you simply do, and I was for a long while, I was frustrated holding physical silver, okay, watching it come down. And then I figured out, hey, man, just go. and short the futures, the micro mini, because you can get right now. I'm holding 3,000 on three contracts. It's 1,000 ounces a contract. Okay, just to show you. Uh, so you can do the math on that for the total investment that I have in there. Okay. So anyway, that's the secret. So anyway, on the way down, and we show you, and there's some resistance on here up here that collaborated with, and there was a correlation with the DXY, the U.S. dollar currency index. So we weren't just depending on, that to pull back. Okay, so there was a couple other factors that we were, using kind of that edge our, odds and potential of this actually taking place. But anyway, on the way down, you're pulling in those profits going short. And then once it hits and we see the reversal, you can go long or take that profit and then roll it into more what? Physical. Okay. And so that's kind of the name of the game there. And it's really, I mean, seriously, it's simple, easy to link your current trading account, whether it's TD Ameritrade, E Trade, Interactive Brokers, whatever, to the CME. Continental Mercantile Exchange in order to do this. Okay. And then here's platinum, right here. And this was our stop loss. And see, I practice what I preach. I don't want to be out there. Here's copper. We think that's really going to do well. And then we went short. We went short uh, gold mining. Okay, the miners. So okay, gold mining Inc. So anyway, just to show you, how much we trusted our system here, trading system that we show people about and stuff. But anyway, I just wanted to bring that up to you because if you remember last week, if you follow any of the, big influencers, traders or whatever, they were screaming, hey, we're going to be $3,000 gold in another week. I kind of exaggerate, but you know what I'm saying. They were pumping it up saying we're going to, run to all-time highs, which I believe we will, but it's just not today. Okay. So we're doing it, by the day, swing trading, day trading, whatever, and pulling those profits out of the market. But all right, guys, I sure do appreciate you watching the video. Check us out on Twitter, check us out on YouTube or Patreon, and then I'll link the course below. And we will see you on the charts.